Hey everybody, hey again. My name is Ryan Floyd. I'm a managing partner at Storm Ventures, and I'm here to give you another video blog about the dreaded investor presentation. I hear this a lot from entrepreneurs about how to put together the presentation, what needs to go in it, how best to convey ideas, and then ultimately really how to hold people's attention. So let me give you a few pointers over the 20 years that I've been investing in terms of what I see as best practices, and hopefully you can apply it in terms of your next meeting with an investor. Okay, so the first thing is please research your audience. It hopefully isn't a lot of work to know who's in the room, but you ought to know what companies they've invested in and where there might be resonant points. Because I can tell you most investors are going to be thinking about your business, obviously in the context of their own experiences. Maybe they've had a portfolio company that's similar to what you've done or in a related market. Maybe they've actually worked in the field that's similar to where your business is. It's important that you have that context walking in because maybe they didn't have a great experience. You're gonna be dealing with those questions when you walk in. Or maybe they had a great experience. You're definitely gonna tap into that resonance when you meet with those investors. So it's important to have that context and have done your research on the audience going in. The second thing I tell you is that think about your meeting, even if you've got an hour slot, as a 7-minute meeting. Why 7 minutes? Well, here's why. You're gonna spend the first couple of minutes, no matter what you do, chit-chatting, saying hello, introducing yourself, typical pleasantries. That's all fine and great. Icebreakers, wonderful. After those 2 minutes, you're gonna get into 5 minutes, and you have 5 minutes, maybe, might even be less than that, maybe it's 3, to get everybody's attention for the remaining part of the meeting. This is absolutely critical because if you don't capture people's attention in that first 2, 3, 4, 5 minutes, it's going to be very hard to recover later because they're going to already be checked out or tuned out. Look, investors meet with a lot of companies, and so for them, they're going to be trying to evaluate very quickly in terms of, is this something that fits, does it not fit? And so let's talk about a little bit more about what to put in those first couple of minutes to have the most impact and to get people following you for the rest of the meeting. So number 3, what you're gonna need to do to capture their interest is you gotta be able to distill everything down into a very simple message in a couple of slides. You cannot expect someone to wait to understand why they're sitting here listening to you until slide 97, because you're not gonna get the time. And I'm not going to try to tell you exactly what needs to be in those slides because it's going to be very dependent upon your business, your situation, and your context. But let me give you a few thoughts about what maybe ought to go into that distillation. Number 1 is the people and the team. Who's on the team? Is that something that you put your best foot forward on? Is this an experienced team that's got a lot of domain expertise, that's found a lot of success in the past? Well, if so, then that ought to be something you lead with. Do you have customers? I'm amazed at how many companies come in and it takes them 5, 6, 7, 10 slides before they tell us that they've got all of this traction with customers. Well, listen, from an investor standpoint, customers is the ultimate measure of your success. So if you've got customers and you're having a lot of success in the market, by all means, tell me about that at the very beginning of the deck because that's going to get my attention. Maybe for you, what is the most important part about the early part of the deck, because you don't have customers and maybe you've got a very early team, is then you got to talk to me about your vision. And vision's important in the context of really why now. I think one thing that often people miss is that ideas, they come and they go, and it is all about execution. But often the idea is all about the timing. You know, Facebook wasn't the first social network. But why was Facebook so successful beyond the fact they did an incredible job executing? The timing was right. So most investors want to hear, even if it's not explicitly, they want to know why now? Why you? Why your team? Why your company? Why now? And putting that together in a very simple message, that's the way you're going to capture their interest. Because your objective in those first couple of minutes is to capture their attention for the next hour, and it's not to convey every aspect of your business Certainly not in the first couple of slides, but not even in the entire presentation. If you think about it at a really high level, your objective of this first meeting is really to get a second one, is to convince the investors that this is something that they ought to spend time with. And so go into the meeting with that perspective. Okay, so let's talk about a couple other things. And now you've gotten through the first 3, 4, 5 minutes and you've got their attention. Congratulations. So number 4 is, I want you to talk about metrics. Assuming you've got a business, now we look at businesses typically that have already generated some revenue. They're still very early, but I want to see those metrics. I want to see that you know those metrics. I want to know that you're measuring sales efficiency. I want to know that you care about the numbers. Because if you care about the numbers and you're looking at those metrics, it's going to be so much easier to convey what's going so well in your business. So look at those metrics. Number 5, I want you to talk to me about the market and the competitors. And when you talk about the market and competitors, I'm not interested in looking at a $50 billion TAM. I mean, I am, but I realize for a startup, talking about a $50 billion TAM, it's not super meaningful. So a much better way to talk about the market is in the context of what it is you're selling, bottoms up, types of customers, mid-market, these are the price points, across the United States, these number of companies, this is the customer profile, and build it up that way. Because then it has credibility. It comes from your own experience in talking with those customers and your experience in the field. And that's going to give me the confidence more in you as a founder and as an entrepreneur. So the next one, I think we're on number 6, is thoughtfulness. Now this is kind of an unusual one. What do I mean by thoughtfulness? It's thoughtfulness as a human being, but really what it is thoughtfulness about your business. I mean, look, there's so much going on. I don't expect everything to be going right. The worst meetings I have sometimes are the ones where I feel like I'm just getting canned answers from an entrepreneur. Because I don't know, is it them? Have they really thought about all of these questions? Have they come up with them? Has someone else fed them the answers? I want to see thoughtfulness. It doesn't mean perfection. It doesn't mean that you have to come across knowing everything. In fact, I expect you probably not to know everything. And one of the things that I'm looking for, and again, I'm not unique, I think most investors probably think about it this way. They want to see that you're thoughtful about it. They want to see that you understand where the gaps are. They want to see that you understand that maybe these things aren't working. If you don't know the answer to a question, say you'll have to get back to them and you'll have to think about it. But they want to see that you've kind of got these demonstrated thoughtfulness about your business because it's a great indicator of success. Number 7, problem and the context of a solution. So when I meet with companies, I want to really simply understand the problem that's being solved, and then really how are they solving it? And again, going back to what I mentioned before, why now, why them, what's changed? I think being able to really simply describe this, it's very difficult to do because you may find that different customers want to buy in different ways and may have different, but you need to figure out a way to really articulate this because being able to identify that problem and the solution is critical not only to helping me understand your business, and look, venture investors are not going to know likely much about your business or your market. So it is a big education process. But even more importantly for you in terms of building your business, the reason it's important to me is because for your sales folks, for your whole sales process, you have to be able to articulate that. If you can't articulate that whole problem, then how can you possibly expect salespeople to go out there and figure out who to sell to? How can you expect marketing folks to figure out who to market to? So understanding that problem in the context of a solution, that's super critical to convey in that presentation as well. So I'll give you 2 more things that aren't in the deck, but things that I would think about as you walk into some of these meetings. The first is learn from these pitches. Learn from meeting with investors. Hopefully you've got a co-founder or someone else that's in the meeting with you. I'd encourage it. You should never go alone. Always have a wingman and take notes. Discuss the meeting afterwards. What were the tough questions? What did you get asked? I guarantee you, after practicing a few times, and you can practice with friendly folks. We often have our portfolio companies come in and present to to the firm here before they go out and try and raise money for others, so we can ask some difficult questions and hopefully start to train them into how they want to, think about some of those questions and answers. And it's not giving them prepared answers, but it's just, like you prepare for debate and sparring, and it's super helpful. And if you're doing that in the context of meeting with investors, that's great too, but take notes and learn from it. Don't be discouraged. It's tough. Meeting with investors, it's easy to be critical. It's easy to ask hard questions. What you can do though is you can take the positive from it and learn from it and then just constantly improve. And I guarantee you, after half a dozen meetings, your pitch will be 10x better. The second thing I'd tell you that not is in your pitch, but just to be prepared for, is that look, people have egos. Everybody does. And venture investors have some of the biggest egos out there. So be prepared when you walk into the room that you're likely are going to encounter some people that probably think they're pretty darn smart. They probably think they're smarter than you. They probably think they know more than you. And so your job is to educate them and to tell them about your business. Arguing and going down a rat's hole on a particular point, while you probably, in my experience, 99% of the time are right, the problem is, if you're arguing with a venture investor, I guarantee you, if they lose the argument, they are not going to invest in your business. So you win, they lose, you lose. So you need to think about defending your points, and if things get contentious, just deflect and come back to it later and be soft, because sometimes there's even politics in large partner meetings with multiple people in the room. You have no idea what's going on in the background. Maybe there's one partner that's trying to get something else done. And so he's asking or she's asking tough questions because he wants to do this. I mean, who knows? You never know walking in to those particular dynamics. So you just got to take a deep breath, find your Zen place and deal with it the best you can. Try not to argue, because if you do, especially with these folks that have enormous egos, it's not going to serve you well in terms of getting to that next step. So the demo. So let's talk about the demo for a second. I get asked this question all the time. Hey, Ryan, should I put a demo as part of the presentation? Listen, you'll get a lot of different opinions on this. I'll tell you, as far as I'm concerned, a demo has no place in a first meeting, and here's why. First of all, it's going to be very rare that you're going to find a venture investor that really understands your product. I mean, think about it for a second. You're selling, most likely, to a functional lead, a head of something that really values what you've built. A venture investor, boy, they're not going to know exactly what features or what ought to go in there. Look, they may geek out and they may think it's really interesting, but it's not going to do the best job of really conveying why you. Eventually, second meeting, third meeting, yes, it's neat to see a demo. People want to see that it works. People want to see what the UI design is. People want to get a feeling for that. But a demo can consume a tremendous amount of time. I know most founders, they really like to show a demo. Why? Well, because obviously you're very proud of what you've built, and I get that, and I'm not trying to rain on that parade. But if the objective of this meeting is to get investment from a venture investor, my advice to you is probably leave the demo at home, or if you have to, if someone asks for a demo, you can be ready to do it, but I wouldn't interject, because you might say, hey, does everybody want a demo? And you ask the question. People might say, oh yeah, sure, but that'll waste 15, 20 minutes of your precious time. So if you want to really control how that meeting goes, my advice is to skip the demo. So the last thing is time. You got to be mindful of time. You obviously probably have an hour. I do some meetings that are less than an hour, but most investor meetings will probably be set up for about an hour. You need to get through it. You need to be able to convince people and make your points not in an hour, but think more along the lines of 45 minutes. The best meetings are the ones where you generate conversation. And the way you generate conversation is you watch body language and you give people the chance to ask questions. If you're just playing a tape of like a pre-recorded presentation, it's unlikely people are going to ask questions. And look, sometimes you get a very sleepy audience. It's going to happen. Don't take it personally. But if you can engage, have a conversation, and really be mindful of time, which means keeping it relatively short and really distilling all of your points, so that if you did just give the talk track, you'd be done in 30 minutes. That's really how you ought to be thinking about it. So look, I hope you liked the discussion here, my comments on how to put together an investor presentation. It's no easy task. There's a lot of components that go into it. Please leave me comments down below if you'd like me to give some more insights or thoughts about what I might do in a particular situation. And certainly if you'd like me to put together a different video around a particular aspect, financials or metrics on the investor presentation, I'd be happy to do that too. But I hope you got something out of it. Good luck. I know you'll be successful. Please share this with your friends and look forward to the next one. Thanks.